markets. Joining us right now is Scott Brown. He's the chief economist at Raymond James, also a Bloomberg best economist on employment. John with me as well to sort of frame the market reaction in this. So far, I would say on a score of what is the largest increase in ADP history, we're seeing kind of a muted market reaction, which is puzzling.
Well, traders have to scratch their head. Don't forget, it was a month ago when we had a jobs report that came in below estimates, and the market hung in there because it said, okay, the Fed's going ahead with this additional stimulus. That's going to continue because the jobs market is weaker than we thought. All of a sudden you get a number like this and they say, wait a minute, do we really need all that additional stimulus from the Fed? Is the Fed going to continue with QE2? So you're all of a sudden saying, okay, we've seen a big rally in the markets. Maybe this is the kind of move that means that the Fed's going to not use as much of that stimulus money, and I need to hold off here. That's partly why traders say we're seeing the kind of reaction that we're seeing right
when
now.
You don't see, when you're not expecting something like this, you're not quite sure how the policymakers are going to react.
Yeah.
Scott, you must have not expected this number either.
No, it was certainly a surprise. Obviously, very, very welcome news at this point. But you do want to take it with a big grain of salt here. I mean, this is only 1 month. You have a lot of seasonal quirkage going on in December. You normally see a lot of layoffs in manufacturing and construction, so that could be an issue. And bear in mind that
right, but this is a huge margin miss by all the forecasters, though, even with those seasonal factors.
Sure, but bear in mind we need to see private sector job growth on the order of 250 to 300,000 for really 3, 4, 5 years to push the unemployment rate down, back towards say 5.5% or so.
Right.
The one group that we have not talked about, and Mike McKee was mentioning it earlier, are retail-related jobs. Remember, last month you had a negative retail jobs number. A lot of the economists I've been speaking to this week ahead of the jobs report say the reason you've had that whisper number heading into this ADP report for the jobs number on Friday of around 200,000 is because you're going to see a huge surge in retail jobs. There are also a lot of those jobs that come through temp hiring.
Right.
So if you were to take potentially the temp numbers and the retail numbers combined, a lot of it being the retail story, but you can bet that there are a lot of economists that are going to be looking at revising their numbers on that today.
Well, actually, Scott, that leads me to two questions for Scott, which is number one, are you going to be revising your Friday payrolls number?
I don't think so at this point, but I would suspect, and I think I suspected beforehand, that there was a potential for an upside surprise in Friday's numbers. And some of that has to do, I think, with the seasonal adjustment. The retail story, again, I think there was a big disappointment in the numbers we had for November. Maybe that shows up either in revisions or in a much stronger retail number for December.
But this means to you a greater chance of an upside surprise on Friday, no?
I would say that's the case, yes.
Okay.
We also have jobless claims coming out tomorrow. I mean, that could be another factor for the markets.
Right. Well, we had actually good jobless claims last week, so so who knows? But Scott, then the second question what John was saying to me that leads me to is that if we see these great numbers in December, and part of that might be this part-time hiring in the service sector, do we lead that up to an ugly report then? Does that mean an ugly report in January?
That could be the case. Often, if you get more seasonal hiring in November and December, you're going to get fewer seasonal layoffs in January. So that could distort the numbers a bit. We really want to see what happens more towards the spring, and that's when most corporations begin their hiring. The real critical element is a lack of new hiring going on from smaller firms, and that's really a function of credit, and I think that's going to improve over the course of the year.
Okay, Scott, we're going to leave it there, but thank you so much for joining us.